Hello, everyone. Ray Avanzino again from Polaris Capital Partners. Part three in a series of Ray's talk about the mortgage industry and products that could help borrowers buy and refinance. So let's get into it. I'm going to focus on a presentation this time that was given to financial planners. So if I reach any financial planners here with this recording, I'd love to sit down with you all, and attorneys and um, realtor offices, independent, whatever, CPAs, because it applies straight across the board. So I'm going to jump right into it. Strategic lending solutions for financial planners. Let's step into it. Basically who we are, right? Polaris Capital Partners. We're a mortgage broker providing solutions across the board for our clients. We're nationwide capabilities, residential and commercial, um, white glove support. In other words, we're advisor aligned. We're here to help your clients. We can meet with them, we can Zoom, we can talk over the phone, of course, whatever it takes to spread the word and educate and strategic in a sense, we're not here for the one deal. We're here for long term to help your clients. We're centered on, liquidity, leverage, long-term planning, helping clients build wealth in real estate for over 25 years. Why financial planners partner with us? Um, we just have a huge suite of solutions that help clients. We got access to non-traditional lending options, non-QM, private money, fast underwriting. We get things done quickly. We're a boutique shop, so we can get things done quickly, and we're a collaborative approach, right? We're talking with the clients, we're talking with our partners, making sure we got the right solution. Um, Product ecosystem. I mean, again, we have a comprehensive suite of products across all platforms, residential, commercial construction, private money, reverse mortgages, HELOCs, SBA loans, anything having to do with real estate and business financing, we could help in one way or another. So let's just jump into some of the products. I'm just going to sort of go over a little bit of everything that we offer so that if it fits into someone that you may know, we could set up a call and chat with them. So conventional loans, I mean, that's your Fannie and Freddie, that's your vanilla, your primary second home investment properties. It's full documentation loans, pay stubs, W-2s, tax returns, um, the best rates and the lowest cost. Um, and it's ideal again for strong credit and income profiles. Planner value, efficient financing without asset liquidation, because it's all about the investments they have with you all, the financial planner. Next set of loans would be FHA loans, and I didn't mention your VA loans, which is the Veteran Administration loans. The FHA loans, great for first-time home buyers, low down payment down to 3.5%. For VA veteran loans, 100% financing. So great options there. Flexible underwriting guidelines. With the FHA, you can get higher ratios approved and so forth. Primary residence only, though, that's a big factor there. Um, Planner value would be it preserves client liquidity because it's only 3.5% down. So it's a great program for first-time home buyers. HELOCs, home equity lines of credit. Those are can be considered your second mortgages. Maybe you have a first at say 3%. You don't want to do anything with that, but you need some money for whatever, home improvement, pay off debt, um, kids' education, whatever it may be, emergencies. You can get a HELOC, revolving access to home equity. So you could take out 100,000, then you could pay it down, then take it out, pay it down. And it's interest-only payments, which is great for cash flow, and it's ideal for short-term liquidity needs. We have one for just emergencies, zero balance, but just in case something happens, we can get access to 150, 200K without having to tap into any savings or investments. So it's a great thing to have. Um, and the planner value tactical, it's cash flow management um, tool. Private money. Before I jump into private money, I wanted to jump on to non-QM loans, which I don't have a panel for here, a slide. But anyway, non-QM, right, non-traditional loans allows you to, in some products, not to use bank statements. I mean, excuse me, your tax returns. In other words, we have a bank statement loan where great for self-employed individuals. They may have a lot of write-offs. They don't show a lot of income. And so we could utilize 12 months to 24 months bank statements showing the cash flow. And then we take that gross number and tie in a debt ratio, and we're able to qualify at a much higher income level. So that's a great product. With the bank statements, you can also qualify with a 1099, W-2. So there's a lot of different solutions there for people that are short term on their job. Uh, the other type of non-QM would be the DSCR, the debt service loan. That's great for investment properties. And again, no tax returns are used. And we qualify off the property that you're buying. So it's just that property that we're utilizing to qualify. So that's a great tool, great product. Um, the debt service loan, great for investors who don't want to pull out all their returns. And then you can lend in the LLC, which is great. So that's the DSCR. There's stated income loans we offer. There's foreign national loans. There's asset dissipation for you got clients that have a lot of assets, not a lot of income. So you could take those assets and amortize those down to add additional qualification. And we could talk more about that. So private money loans, those are asset-based underwriting mainly. It's tied into the equity of the property. A lot of times you're cross-collateralizing properties, but you're not really heavy on the actual full documentation. There's more risk, there's higher rates and costs, but usually you're getting someone out of a jam. So it's a good opportunity. Fast closings, sometimes 7 to 10 days, flexible credit requirements. Like we could do credit scores down to the 500s. We're helping someone. We just help someone with a 527 score. Um, and then we'll work to try to improve their credit so that they can get into better loans in the future. So the planner value is bridge financing without forced asset sales. Great opportunity there. Commercial loans, everything office, retail, multifamily, churches, gas stations, anything out there that's a building, we can help. Multi-unit, like, 12 unit, 15 unit, 100 unit, we can help finance malls. Um, those are all tied into servicing too, debt servicing. In other words, the rents. What are the rents? So you need rent rolls and tax returns on based on the revenue from the property and so forth. So those are a little more complex, but they're great opportunities out there. We could do those throughout the U.S. SBA and non-SBA. We could do the SBA Small Business Administration loans, and then we also have local banks that we could partner with to refer those to. And flexible structures, there's all kinds of different programs and opportunities there. Aligns business financing with wealth planning because there's different strategies um, along those lines. Construction loans, we can help in that area, ground up or major renovation projects. One-time or phase draw structures. There's different ways to put it together. You need a really good qualified general contractor, licensed, that has a good history of work being done. There is owner builder construction loans also, custom homes and investor projects. Um, it's a good opportunity, and the planner value is predictable funding milestones. So construction loans, great way to get into a new property. Reverse mortgages, more and more getting accepted for clients over 55 years old and 62 and up. FHA insurance for the 62 and up, those are the Acom loans. Home equity conversion mortgages. No required monthly mortgage payment. That's the key behind this product. It's great for seniors on fixed income, and maybe they have all of a sudden all kinds of medical expenses because they want to stay in their home, but they get ill. and they need 10,000 to 15,000 a month, and they don't want to tap into their retirement because that's gaining value in the stock market, bonds, whatever it may be. So they have this fixed asset there. They got a free and clear home. They could draw off of that. The client retains home ownership. That's a big misnomer that out there rumors that the property is taken. It's not taken. It's just like any other mortgage. Um, Proceeds can be tax-free. That's a huge thing for financial planners to be aware for their clients. It really is a powerful retirement planning tool. A lot of different ways to slice and dice this. You can take lump sums, you can take equity lines. Typically, what we'll do is if someone needs whatever a certain sum, let's say 150,000 upfront to pay for a year of medical expenses, then we'll put an equity line on the back end, and that equity line can grow as the value increases. It's a pretty cool product. Um, More to that, it's tax-free proceeds. You get a growing line of credit over time, reduces sequence of returns risk, and supports sustainable retirement income strategies. And again, we sort of touched on that a little bit, where you don't have to tap into all your retirement funds, utilize your property. So matching lending to the financial plan. Here's just a few of the reverse mortgages, HELOCs, private money, commercial. We talked about all these and all the others. Working with financial planners, it's a collaborative process. We work together with your clients and yourselves to make sure it's the best solution, client-facing education. In other words, we'll meet at your office, on Zoom, on phone calls, whatever it means, transparent compensation. Basically, the banks are paying us, so there's really no additional fees, and we're not steering them to one product or the other. And long-term partner focus. We're here for the long term. We're not here for the one deal. We want to build wealth in real estate, support our partners and our clients. Um, and let's partner together. We have co-branded presentations we can put together like this one and co-brand it, planner exclusive strategies, and dedicated support. We're here for you guys. And let's schedule a call. Here's my information. My cell phone 650-576-6531. And then my email, ray@polariscappartners.com. I hope I didn't go too fast there. I wanted to get through as much as I can in the quickest amount of time. But again, we're here for you. Ray Avanzino, Polaris Capital Partners. I work with Steve Herbert. He's broker owner. He's been doing it for 35 years. And we have other partners throughout the state that are part of the team. Operations, we move quick, we get things done. Let us know if we can help, Ray Avanzino, and appreciate the opportunity.